the US environment. And that's really driven, as you say, by the US and by Denali. So we are part of that working group, but the two aren't linked.
And I guess one final question. How has it been received to date? When we were chatting before we went on the air, you mentioned that the response has actually been a groundswell.
Yeah, I've been so encouraged by this. You know that the London market in the past, you just mentioned the alphabet soup and the acronyms and the projects that have gone before this. But I think there's a real culture change. There's a real shift in feeling here in the London market. And I think with things like electronic claims and accounting assessment, people are used to now starting to do things in a different way. And I think because this initiative is so simple, it really is very basic. Because it's so simple, people have taken to it because they can see the benefit, i.e. we're not imposing a way of working, we're just facilitating or supporting the current way of working, eventually all through the life cycle. Because the one thing we have, diversity is great, but to bring diversity together, you've got to have a standard, you've got to have an information standard. So my initial fear in year one, or initial focus, was going to be how are we going to make sure we drive enough uptake. We've already filled the first 3 pilot phases. The first 9 months we're running in steps for 3 months. We've now got over about 80% of the managing agents signed up. So I've now moved from sign up to looking at the information drop, i.e. what information do I have to put on this exchange and how quickly that gives the market the most benefit. And so that's really encouraging.
Oh, that's very good. That's very good. And this is something that once implemented will extend beyond simply Lloyd's at 1 Lime Street. It will hook into your global operations, hopefully?
Yeah, I mean, all Lloyd's business should be carried on it. And as you know, the company market are participating too here in London. We've got 7 company market companies who are part of the pilot. So we're focused on that, get it up and running, and then we'll see.
Okay. Well, congratulations on at least the effort. I noticed you rolled out a number of heavy hitters for the inaugural debut, just making positive comments to the press about it, and that was impressive alone. So we wish you the best, and we'll keep in touch with you on it. Sue Langley, thank you for your time today.
Nice to speak to you.
Our pleasure. The slow drip of the Chinese water torture in Zurich has finally ended as Swiss Re has finally come out with their numbers. The full impact of the painful year 2008 on the world's largest reinsurer's balance sheet has been revealed. The reinsurance giant's shareholders' equity slumped 36% over the full year. The company also said it will not proceed with its 2 billion Swiss franc rights issue at this time, although it's proposing to increase its authorized share capital by, quote, not more than 180 million shares. The company reported a record fourth quarter loss of 1.75 billion Swiss francs, which is about 1.5 billion US, compared to net income of 170 million Swiss francs a year ago. Overall, the full year loss was 864 million Swiss francs. The company had 5.89 billion Swiss francs in write-downs during the year, including 2 billion francs in structured credit default swaps and 3.2 billion Swiss francs in discontinued trading activities. According to George Quinn, Swiss Re's chief financial officer, in a press conference this morning, you can't end up in the position we're in today without making mistakes. We're not happy about it. Swiss Re, of course, was given a $3 billion Swiss franc equity injection by Berkshire Hathaway. It said that its P&C segment delivered superior underwriting performance for the 4th consecutive year. Its combined ratio jumped to 97.9% from 90% for the full year. Earned premium for the full year at the P&C businesses did drop 24%, down to 14.4 billion francs, down from about 19 billion francs a year earlier. The group added that the losses on the P&C book were driven by losses from, guess what, Hurricane Ike of 522 million Swiss francs. Yesterday, the company was downgraded by the ratings agency Standard & Poor's to A+. This is a move that Swiss Re said this morning cost it $1.5 billion in new funding requirements. A new name has appeared on the firmament in Zurich, that's Stefan Lipp. Mr. Lipp made his first public comments, first public remarks today as the new CEO of Swiss Re. He espoused a back-to-basics attitude by the reinsurer, as well as the disposal of non-core businesses. Lipp is set to conduct a strategic review of the business in the next few weeks. He pointed to the company's continued underwriting profit as a reason for optimism. He said, quote, "What we have to do is follow our previous proven record of putting the money where the earnings are." He said, "Our focus is on the core business. You can say back to basics. The basics were quite comfortable in the past, and we all had fun, and our clients appreciated us being here." Tellingly, Mr. Lipp continued by saying this, "We have to invest our premiums conservatively. That is the difference between an insurance business model and a banking model. Liquidity from customers comes straight into our house." He dispelled rumors of Swiss Re losing business. He attributed that to other market players. He pointed to Swiss Re's combined favorable ratio over its competitors over the last 3 years. He said demand is up, but insurers' cover base has reduced as they're facing the same challenges we are. He said capital from sidecars, private equity, and hedge funds is largely no longer existing. He said, quote, "Clients might not seek more cover for natural cat, but they would like something as capital relief. We're going forward with a clear focus on capital relief for our customers." He wrapped up by saying, "I must ask you for patience. I've been in this job for barely a week. I need a little time, so bear with me. In 90 days, we will be back to discuss our results. By then, we will have much more information." We wish Mr. Lipp the best, and we hope to continue to be reporting about him for a very long time to come, all in a positive vein, of course. A little bit to the northwest, some news from Paris. AXA has slashed its dividend this morning as the company reported an 84% drop in full-year net profit and warned of a challenging 2009 coming up. The company said net profit for the full year fell to 923 million euros, about 1.16 billion US. This from a profit of 5.67 billion euros a year earlier. However, it still exceeded analysts' forecast of 469 million euros. AXA said the results were hit by fair value adjustments of, guess what, asset-backed securities, as well as the negative mark-to-market impact related to the group's bond portfolio. CEO Henri de Castries said 2009 will be another difficult year in light of the current global economic environment. He said that they will ask shareholders to approve an issue of up to 2 billion euros in preference shares, which Mr. de Castries insisted was, quote, an insurance policy that would only be used as a last resort to defend the company's finances if the crisis deepened. Meanwhile, the Union Bank of Switzerland made some news late yesterday. The Department of Justice in the United States said that UBS has agreed to pay $780 million in fines, penalties, interest, and restitution over criminal charges that it helped certain U.S. taxpayers evade taxes. UBS also agreed to exit the business of providing banking services to U.S. clients with undeclared accounts and to turn over the identities of those customers to the U.S. federal government. This is most interesting because as part of the agreement now, the bank has agreed to immediately provide the American government with the identities and account information of some U.S. customers. The Swiss Federal Council, or their Swiss cabinet, said this morning that Swiss banking secrecy is still in place, despite the agreement to release the data to the Department of Justice. The group said in Bern this morning that banking secrecy serves to protect privacy but does not protect tax fraudsters. The statement came in reaction to the settlement. Key elements of the deal, of course, include the transfer of those identities. The release of the data was ordered through the Swiss financial markets regulator FINMA, which had concluded in its own probe that the UBS bank violated the requirements for proper business conduct. The Swiss government said that they took the steps in the interest of the Swiss and indeed of the global financial system. The stock market is down about 8 points. We go to a word from our sponsors.